And these 2 days have been nothing short of inspiring. We've witnessed experts come from various fields together discussing opportunities and solutions that hold the promise of catalyzing economic growth and revitalization in Sri Lanka. So today, we have the honor of hearing from a very distinguished individual whose experience and expertise are truly exceptional. Mr. Suresh Shah, the head of the state-owned enterprises restructuring unit. He's not only a veteran chartered accountant, but he's also the founding CEO of Lion Brewery and the current chairman of the Ceylon Tobacco Company. He also serves as the chairman of the Ceylon Chamber of Commerce and is a past chairman of the Employers Federation of Ceylon. He has also served as a commissioner on the Securities and Exchange Commission and was a member of the Monetary Policy Consultative Committee with the Central Bank of Sri Lanka and the Council at the University of Moratuwa. So, with such remarkable profile, his insights today on operationalizing SOE reforms and the road ahead are bound to be invaluable. Also, this goes to our dear participants. Note that after the keynote speech, there will be a Q&A forum, which will be moderated by Praveen Kanagasabai, who's the Vice President of Investment Banking. So please do send your questions to the Capital Alliance account through the chat function. So without further ado, let's embark on this final day with a sense of optimism and anticipation. Mr. Shah, it's over to you.
Thank you. Thank you very much for the introduction. Good morning, everyone. Rainy day in Colombo, but let's hope the sun shines in Sri Lanka soon in more ways than one. In terms of the SOE restructuring, the role of our unit, notwithstanding the fact that when you talk about state-owned enterprises and restructuring, everyone thinks that, we are trying to sell everything that's around. The real objectives of SOE restructuring are fundamentally twofold. First and foremost, it's to provide citizens of Sri Lanka with better quality products at reasonable pricing and convenient availability through a competitive environment. And I want to emphasize the term competitive environment. If you have time, I'll come back to that in a bit. So that's objective number one. And objective number two is to minimize or basically even eliminate the fiscal burden that certain entities have placed on government finances. So these are the two fundamental objectives of state-owned enterprise reform. And as a part of this process, yes, there will be certain divestitures. I must also give a small caveat here. When we talk about state-owned enterprises, you would have heard that there are 400 or 500 such SOEs in Sri Lanka. But what we are looking at are about 130 entities, which are the commercial entities. And how do we define commercial? It's again twofold. Firstly, they are revenue generating. And secondly, they are for profit. Whether they make profit or not is a different story, but they are for profit. So these are the commercial enterprises that we are focused on. And we've been able to unearth so far about 130 plus commercial state-owned enterprises. Maybe we can even call, yesterday we had a seminar and there was a nice term used for this. It was public commercial entities. So there are about 130 such. There may be more, which we've not been able to find out up to now. And of these 130 entities, about 15 or so are not really operational, and so they need to be bound up. So that's the easy part. Then we have about 20 plus entities that government may need to retain or need to control into the near future. Those may be looked at from a PPP model or maybe just direct government control, but fundamentally about 20 plus entities that may need to remain within government. This leaves about 80 odd entities, which from a purely commercial and economic perspective, government does not need to control, or not, the government does not need any involvement. Now, I emphasize that this is from a commercial and economic perspective, because once the political perspective or the political hat is worn and looked at it from that point of view, the 80 plus number may come down a bit. politics being what it is. So really, our unit is looking at all three areas: liquidating the non-operational enterprises, setting the stage and setting the operating environment for the 20-odd enterprises that government should continue to control, so that those enterprises are no longer a burden on the government's fiscal operations, and that they provide better quality goods and services to the citizens of the country. And of course, those enterprises that we don't need to retain within government control, for those enterprises to be divested. So this is very broadly the mandate that we have and what we are working on. What no doubt that all of you have seen in the public so far, in the news, is about the divestitures. And so let me touch on that first. We've got in principle cabinet approval to divest 7 enterprises, and those enterprises are Sri Lankan Airlines, Sri Lanka Telecom, Sri Lanka Insurance, the Hyatt Hotel, the Hilton Hotel, the Litro Gas Company, and Lanka Hospitals. The process that we are following is first and foremost the appointment of a transaction advisor. Transaction advisors for all 7 entities have been appointed. The IFC is the transaction advisor for Sri Lankan Airlines, Sri Lanka Telecom, and Lanka Hospitals. Colliers is handling the Hilton. Deloitte is handling the Hyatt and Litro, whilst Alvarez and Marcel, together with Cal, is the transaction advisor for Sri Lanka Insurance. So the transaction advisors have been appointed, and they have started their work. We start with a sell-side due diligence because there are lots of challenges within these enterprises which we need to understand, and some issues that we need to fix. So let me give you a very small example. If you take the Hyatt Hotel, there is 22 perches in the middle of the building which does not belong to government at this moment in time. There are 2 claimants to this property. Firstly, there was the previous owner, and secondly, there is a bank that claims to have parate executed on a mortgage of that company. So this is something that we have to unravel, and these are coming up through the sell-side due diligence. So the sell-side due diligence is to understand the issues and the challenges each company faces, and then we fix them so that, you know, at the end of the day, when we do a transaction, we do a transaction of a clean enterprise. We also need to do valuations of these entities. Valuations will be done by the transaction advisor, but they also have to be done by the chief government valuer. So ideally and hopefully, we'll have a scenario where both entities, the government valuer as well as the transaction advisors, come up with very, very similar valuations. Otherwise, we will need to sit and work through those. Then we go into, and then of course the data rooms are created. And in terms of the transaction itself, it will be a 2-pronged process. There will initially be an EOI. The EOI for the 2 hotels and Lanka Hospital should be issued shortly. We are hopeful that the 2 hotels, the EOI will be issued after the 15th of this month. Lanka Hospitals also might come towards the end of the month or the early part of next month. And then, of course, the more complex enterprises, which is Sri Lankan Airlines, the Telco, SLIC, and Litro, might take about maybe a month longer. Hopefully, it might be a little less. With the EOI, once we have the responses to the EOI, there will be a process of shortlisting based on a criteria that's stated in the EOI. And then the shortlisted investors would be provided access to a comprehensive data room for the buy-side due diligence. And then they will be issued an RFP for which they are expected to provide us both a technical and a financial proposal. And thereafter, there will be an evaluation again, and the final investor selected thereafter. Now, when I started, I said what Cabinet has given us so far is an in-principle approval. And the reason for that is we are not sure at this moment in time what the transaction strategy for each enterprise is. So again, if I take an example, say in Sri Lankan Airlines, Sri Lankan Airlines has three major business units. So one is the airline itself, one is catering, and one is ground handling. At this moment in time, we are not sure whether all three will be bundled in the transaction or whether it will be a combination or whether it will be just be the airline. So that's the transaction strategy. And post the sell side due diligence and the valuations, we will go back to cabinet with the options available and the recommendation saying here is the ideal transaction strategy, but here are the other options available. And then cabinet will give a decision in terms of how to move forward. So that's one point at which we need to go back to cabinet. And of course, the second point that we need to go back to cabinet is once the final investor is selected. Again, we go back to cabinet with the recommendations and the options available, and then cabinet will take the call. Now, in terms of the evaluation, again, I think a very important point, the evaluations will not be done by our unit. Certainly, the transaction advisors will make the recommendations, both post the EOI as well as the RFP. But the evaluations themselves will be the responsibility of two teams. One is a project team, which comprises some government individuals from the bureaucracy. Plus, there will be sector experts and financial experts. So that will be the project team. And then there will be another team which comprises of very senior civil servants, five in all. And these are the two teams that will be responsible for the evaluations. And it will be the second team, the negotiating team, which comprises the 5 senior civil servants who will make the recommendations to cabinet. So that is the process that we are following. And in terms of timelines, I just mentioned the timeline for the EOI. In terms of transaction conclusion, we hope to do the less complex institutions during the first quarter of next year, and the more complex institutions during the second quarter of next year. So initially we'll have the hotels and the hospital, and then thereafter we will have the other 4 entities. So this is on the transaction side, and I'll be happy to take any questions that you might have later on during the program. Moving on to the reform side, like I said, there will be some enterprises that government will need to retain. Now, we know in the past, the SOE sector has been burdened by 3 or 4 fundamental issues. Namely, there have been subsidies parked in these enterprises, which have put a question mark, not just on the sustainability of the enterprise itself, but they've also caused problems within the financial system itself, because they have depended, unsustainable or loss-making institutions have depended on state bank borrowing and has put the financial system at risk also. So parking of subsidies within these enterprises has been a huge challenge. Secondly, board appointments to state-owned enterprises is being a big challenge. Appointments have not been made in terms of competence, capability, experience, and so on and so forth, but more in terms of who knows whom. The third challenge that SOEs have faced is that due to political pressures, there have been people who have been employed in these entities, although there have not been the real need for it. So some of these entities are fairly significantly overstaffed. And of course, the fourth is the misuse of SOE assets for various purposes. So these are the 4 challenges that have led to the SOEs being a burden on the government's fiscal side. And if the SOE sector is to be reformed, these 4 issues need to be addressed. And so that's what we are doing. We've put up a policy to cabinet, a policy document. Cabinet has approved it. It aims to address these 4 points. We hope to transform the policy into a piece of legislation to give more stability to the SOE sector, and also for a holding company which we intend to create to implement both the policy as well as the legislation. The holding company is probably similar to what Temasek was at the beginning. Temasek is very different now. And we might be able to get our holding company to get into the Temasek League maybe some years down the road. But initially, the holding company is set up to ensure that that the SOEs are run efficiently, professionally, they're well managed and well governed. So one of the key issues is the appointment of the boards to the holding company as well as the SOEs. We have put in a mechanism into the proposed articles of the holding company that builds a bit of a Chinese wall between political pressure and appointing capable people of competence to these holding company boards. It's not bulletproof, nothing ever is, but to a great extent, I think it will give independence and the ability for the board to run the holding company independently and professionally. Similarly, we've also thought through of a mechanism for the appointment of SOE directors themselves, again, without the interference from the politicians. Again, trying to make sure that the directors that get appointed to the subsidiary SOEs are also people who are capable, knowledgeable, experienced, and so on and so forth. The policy also speaks about not parking subsidies within these enterprises, taking the subsidies into the government budget. And if these enterprises are well managed, again, we will see that they are properly staffed and not overstaffed. And of course, professional management means that the assets of the enterprises will be used correctly and not be misused or abused. So that's on the reform side. We got to understand also, just coming back to the divestment, we've also got to understand, and something we are very conscious about, is there were some privatizations in the past that were reversed through court action. And one of the first things that we did was that we went through those judgments to understand why they were reversed and so that we don't make the same mistakes going forward. And what we realized was that it was a process, a flawed or a process that seemed flawed, was the reason why some of the judgments, why those three privatizations were reversed. So the process that we are following tries to eliminate those danger areas and those risks. So it might seem at times a slightly longer process and a little more of a cumbersome process. There are processes that are shorter, but we are conscious of the previous court cases. And so we are, hopefully, we will not have reversals going forward. Another important aspect that we've looked at and we will try to address is investor protection. There are some new laws being drafted, including on the investment and the trade side, and we will try to get some investor protection clauses included in those laws so that, things like the Emirates issue will not arise again. A fundamental difference between some of the privatizations of the past and the current exercise is, in this instance, we are looking to divest a majority rather than a minority and management control. So this goes back to the Emirates example. We don't want to have a repeat of that. So in this instance, we are looking at divesting either the government's entire stake, or at least, if not the entire stake, a majority. And if we don't divest the entire stake, the reason is that you get a good investor, and 3-4 years down the road, the valuations might be a lot higher. So you keep part of the company shares for a sell later on. So that's the only reason. If we retain some shares, that's the only reason that we will retain them. So yeah, I've kind of covered most of the things that I wanted to say on the SOE restructuring, on the divestment, and the reforms as well. So happy to take any questions that you might have from this point onwards.
Great. Thank you very much, Suresh, for those insights. And thank you to the audience once again for joining me today. I just want to reiterate you have a unique opportunity to ask your questions from Mr. Suresh Shah, who is kind of the foremost person in the country to speak on this. So I urge the audience to ask, to kind of ask him your questions. Just shoot into the Q&A box that you see on your Zoom platform. So I'll just start taking up a couple of audience questions and relate them over to you, Suresh. So there was one question regarding some of the SOEs which aren't necessarily meant to maximize profits and offer services to the public, and potentially whether divestiture would take away the subsidy. I think you kind of covered that in some of the 20 SOEs which are kind of kept in state hands. Would you care to elaborate a little bit on some of the criteria that you consider when thinking about how do you find the 80 versus the 20 that you want to keep in state hands?
So, Praveen, fundamentally, if the entity is providing an essential product or service to citizens, essential product or service, right? And there is a market failure, that would be the fundamental reason. Or if there are issues of, say, national security surrounding a particular enterprise, or if there is a development need which is better managed under government control than by the private sector. So these would be very broadly the reasons why we would retain an enterprise within government. Definitely not the profit motive. Because, at the end of the day, the government has a very unique system of raising funds, which is the taxation system. It's only government that has the ability to tax, has the legal right to tax. So there is a very specific and unique methodology available for government to raise its funds. It does not need to depend on the dividends of a commercial enterprise, right? So the profit motive is not a motive to retain an enterprise within government.
Right. Thanks for that, Suresh. There was another question from the audience. So I think some of the 7 that were initially outlined for divestiture are some of the largest, SOEs that we do have. There was a question regarding perhaps why don't we start small and kind of build up some progress, mentioning the Grand Oriental Hotel and similar buildings which might be easily be able to be sold with limited pushback. Do you have any thoughts on that, Suresh?
Get the tough ones out of the way.
I think that makes sense. A second question on that note is, I think the first 7 were kind of pegged for complete divestiture. Are we considering options for partial sell downs of certain SOEs? Similar to, I think, Vina Milk, which is a Vietnamese example, which was quite successful, where the government kind of sold down their stake in tranches. Are we considering other kinds of exit options by the SOE, are you?
Yeah, so Praveen, like I said, first and foremost, we'll sell a majority in each of these enterprises because, fundamentally, government does not need to control these enterprises. These are commercial businesses, and even from an enterprise perspective, unlocking them from government makes a lot of sense. Governments have very onerous systems and processes. Private sector systems and processes are much more flexible, and much more attuned to competition. So sometimes these enterprises can't actually compete with the private sector enterprises because of the systems and processes that government adopts, right? So keeping a commercial enterprise within government has many negatives, and I think unshackling them from government is good for everyone. So sell a majority is point number 1. Do we want to retain some of the shares in government for the short term? If we feel that there is a really good investor who has come in, is going to add tremendous value to the entity, and if the 20%, let's say, that we retain might give very close to the 51 or 60% that we sell now, then yeah, but that's very much an economic and commercial decision rather than a political decision.
And then just a couple of questions regarding the governance process in terms of who has the final say on the divestment. Is it the cabinet? Can the cabinet veto any kind of recommendation put forward by the transaction advisors?
Sure. I mean, at the end of the day, the cabinet is the ultimate authority. They have every right to take a decision which they believe is the right thing. So yeah, I mean, yes, of course. But as I mentioned earlier, there will be, in addition to the transaction advisor, there will be two other teams that will evaluate the offers that we receive. Recommendations will be made, and we are talking about professional, knowledgeable people, not just at the transaction advisory level, but also in these teams. So whilst yes, cabinet can always take a different call, I think if they see that the right recommendations have been made, I don't see any reason why they should not agree to those recommendations.
Understood. One member of the audience raised the question regarding what are some of the potential delays to closing some of these transactions. I think you touched on some of those nuances with the Hilton, but perhaps maybe broadly, perhaps there are some themes which you may want to touch on as potential hurdles that may delay this process, which is highly scrutinized.
Yeah, sure. So like I said earlier, there are, with almost every entity, there are challenges that we've got to work through. Different entities have different problems, some big, some small. So we've got to work through these, and these are potential bottlenecks. Similarly, government systems and processes, like I said earlier, are not very flexible, sometimes can be very time consuming. So those can be, again, points at which delays do happen. And then, you never know, you can have unforeseen circumstances which could also delay the whole process. So I'm going on the basis that we've got to expect the unexpected, and that when we face a bottleneck, we've got to work our way through it. We are used to doing this in the private sector, so we are ready if the need arises.
Yeah,
I'm sure it arises as well.
Yeah. And then kind of just to kind of follow on from that, is there, yes, so I think you mentioned, some examples earlier. I think even with the, Sri Lanka insurance, there's a matter of the, segregation of the entities. I'm just wondering, there's 80 that we've highlighted for divestiture, and there's another 73 to go. What is some of the groundwork that the SOE or otherwise can kind of put into place over the next months and years to kind of prepare for that process and have a smoother process when it comes to the eventual divestiture of those entities?
So let me since you touched on SLIC, and let me just take a minute to talk about SLIC. Now here again we have a fundamental reason for the divestitures that we are speaking about. So if you take the insurance industry in Sri Lanka, the law of the land says that you cannot have general and life insurance under a single legal entity, right? But because it was a state-owned enterprise, for some, it managed to survive as a single entity, and that's really unfair by the other competitors in the insurance field. So SOEs, as a result of being state-owned, have also enjoyed certain privileges which don't translate into a competitive operating environment, right? So one of the first things that we did when we took on this responsibility was to unbundle SLIC. So that unbundling process between life and general is now ongoing, and that will have to be concluded before the divestiture takes place. So not only do SOEs take too much resources because of the accumulated losses, but also they've had some special privileges which have not translated into a competitive environment for the others in that same sector. Sorry, coming back to the point that you were making in terms of the other entities. So we are at this moment in time, Praveen, we are really focused on these 7 because we want to get these done, and we want to kind of showcase the process, to give confidence to the country that the process that we are following is both a credible and a transparent process. So to build confidence in the whole privatization exercise itself. And then we will move on to the other entities. But like I said, these 7 are really the big ones. There are a few others also which are may not be comparable in size, but there are a few that are reasonably big. So we will work our way through those. We will follow the same, we will talk to the enterprises, understand what they're doing, what their balance sheets are, what the best strategy is, appoint the transaction advisors, and go through the same process. So the process that I outlined, appointing transaction advisors, sell-side due diligence, valuation, then the EOI and the RFP process, we will follow the same thing with all the entities. But of course, when it comes to the smaller entities, we may not look for international transaction advisors, and we might work exclusively with the local transaction advisors. So we might cut a little bit of time by doing that.
Right. And then kind of touching on the international versus local, so far, what levels of interest have you kind of witnessed for these entities? Given that there's been several challenges in how they've been run thus far. Do we have confidence that we can really garner international kind of interest in these entities from what you're seeing?
So as it stands, the economic environment in the country is a little bit of a challenge. Having said that, when you look at the entities themselves, you see tremendous potential. So if you take, say, for instance, Sri Lankan Airlines, with our landing rights into India and with the Indian aviation sector set to kind of, explode. India is being seen as probably one of the largest aviation sectors in the world. So, Sri Lankan Airlines has that potential. If you take, say, Lanka hospitals, for example, we are an aging population. Healthcare is going to be a big issue in the country going forward. So there is potential for an entity of that nature. Sri Lanka insurance, the insurance penetration in the country is low. Same with on the LP gas side, penetration is still quite low. So every one of these enterprises has a serious upside, right? So I think, yes, we will have interest. I must also say that we've been out there very specifically saying that unsolicited bids will not be accepted. So to that extent, we've not had people, calling us up and saying, I'm interested in A, B, or C. I have an investor who might be interested in something. We've not had a lot of that. And we've also not started the marketing activities so far. So we'll be starting the marketing activities, the market sounding, putting out the IMs, teasers, etc. within the next few weeks. But I'm quite confident that we will have interest in these entities because the entities themselves have tremendous potential.
Right. And then, okay, so let's assume that we have the interest. Is there an ideal kind of investor profile that the SOE or the cabinet may have in mind? Is there a preference for a consortium or for people to come from the relevant industry? From your perspective?
Well, it's that there isn't anything written down in stone at the moment. But it's a common sense thing. So you ideally you will have somebody who has industry expertise or who has the capability of getting industry expertise, in that sector, particularly when you're talking airline, telco, LP gas, again, very important from a citizen's perspective. So people who have access to to procure LP gas in the right quantities at the right price at good pricing. So yes, we are looking at investors who have industry experience, and of course investors also who have not just the capability to invest to buy the asset, but then also to continue to invest in these businesses because they have huge growth potential, to continue to invest in these businesses and grow them and hit their full potential. Are we looking at single entities or consortiums? We are pretty open. I mean, it doesn't matter as long as the expertise is available and the financial depth is there. We are also not specifically saying local, foreign. These things all can be combinations. So it can be foreign, local, JVs. All we are open to all of these.
Right. Just one more question from the audience in terms of what kind of pushback there has been to the privatization process, and this can be either from members of the industry, from the general public, or even political, and how we're kind of dealing with that. Do you have any thoughts on that?
Yeah. So when we came into this assignment, we all thought there will be a lot of pushback from different stakeholders. So we thought there will be huge pushback from the public because the perception in this country has been in terms of these divestors that we are selling the family silver. We thought there will be tremendous pushback, for example, from the unions, right? But I must say that the pushback from these stakeholders has been very minimal. Yes, the union, we have spoken to a number of the unions, and yes, they are concerned about their employment and their terms of employment. But to me, this is not unnatural. Even in the private sector, whenever there is a change of ownership of a company, that you are concerned because you don't know what the future holds. I remember going through a similar exercise when I was in the private sector way back in 1988, I think it was. And I remember being concerned as well because, new owner coming in, you don't know what their plans are. So you are a little bit worried, but so that's natural and not unexpected. But fundamentally, the message we got from the unions is bring us good investors, people who will invest, people who know the business, who will invest in the business, and who will grow the business so that the company, the employees, the country, the citizens, we will all benefit, right? So that was the underlying message that we got from the unions. The little bit of pushback, we are seeing a little bit of pushback, not a lot, a little bit of pushback from one or two of the entities that we are dealing with. So we are working through that. I must say some of the entities have been extremely supportive and very cooperative. It's just one or two that have had a little bit of hesitancy. And also, I think where the politicians are concerned, they're used to having pushback from the public on privatization. So there is that concern in their minds. But for me, I've really not seen massive pushback from the public or from the trade union. So to that extent, a lot better than what we expected.
Right.
Praveen,
yeah.
Just give me a second, please. 1 second.
No problem.
Yeah, sorry.
Yeah, no problem. And since we're talking about the trade unions, I just want to kind of touch on potential other risks to our planned timeline, given that we have the presidential campaigns kind of coming up next year. And I think one of Sri Lanka's failures in the past has been with changing governments. There's been unstable policies. What are some of the risks that you feel this may cause to the divestment process, and how do we intend to circumvent that?
Yeah, so judging by history, Praveen, yes, for sure, that's a risk. By having said that, it all depends. I think if during the election campaign, SOEs and the divestiture becomes a massive issue during the election campaign, then things might change after an election if there is a change in government. So it's two things. Firstly, the process needs to become a massive issue in the campaign itself, and secondly, there needs to be a change in the government. Then then there is obviously a risk. But like I said earlier, from the perspective of the public, I really haven't seen pushback. And I think, as a country and as citizens of Sri Lanka, I think generally the understanding that we can't continue to do what we have done over the last 75 years and that we need to do things differently, I think that has sunk in to the citizens of this country. So I think they understand the need for reform, not just in the SOE sector, but I think across the board. So I don't see that the SOE reforms are going to be a major political platform issue. And to that extent, and then if I'm right, then of course the risk is a lot less than what we've seen in the past.
Right. Suresh, there was an interesting question regarding stakeholder management. I think you touched on some of the stakeholders. I think one of the most important stakeholders would be the 22 million population, or rather the taxpayers, which is obviously a much smaller segment, unfortunately. How can we, and I think some of the challenges with SOEs, previously has been a lack of transparency. I don't think many of the SOEs even publish quarterly reports or even annual reports. How can we engage, the taxpayers a little bit more and provide a bit more transparency and confidence in the process?
Yeah. So a couple of responses, Praveen. First and foremost, if you look at the SOEs, right? I mean, any enterprise, whether it's state-owned or whether it is privately held, fundamentally has to provide decent products and services to the consumers and at reasonable pricing. I mean, that's the expectation of the consumer at the end of the day. And if you ask yourself whether the SOEs have actually performed that function, the answer is no, right? Number one. So through this process, we expect that aspect to be addressed. So secondly, I think there is great awareness within the country now that these state-owned enterprises have been a serious drag on the economy, right? So again, that is something that we want to correct. So if these enterprises going forward are going to provide the citizens with better goods, better services at reasonable pricing, and these enterprises are no longer going to be a drag on the economy, I think that's going to be something positive, right? On the government side, in addition to it not being a drag on the economy, better performing enterprises, more profitable enterprises are going to provide the government with a much greater return in terms of taxation, both revenue related taxes as well as profit related taxes. So I think, and again, if just go back to the SLT example, privatized in 1997, from having to wait years and years to get a telephone, suddenly you could get a telephone overnight. And today, you can just walk in and get a telephone, get a connection in 5 minutes, right? So there's been a tremendous transformation. And that's because we brought private capital into the sector. So I think these benefits will accrue to the country, will accrue to the citizens. They will see the improved services, better performing enterprises, employees will be better off. So I think overall the process is going to be very positive if we can get it to a conclusion.
Right, thanks. And then just one more important stakeholder which I'd like to kind of touch on is the staff and the management teams of such SOEs. Have we seen any pushback from them? And if so, what is the capacity and the influence of the SOE-RU and perhaps the cabinet even to kind of drive us closer towards this process?
Yeah. So like I said, from the employee perspective, we've had conversations with the unions. Some of the company unions have come and spoken to us. And like I said, yes, they were concerned about their, the security of their employment. They were also concerned about terms of employment. But, ultimately, the underlying thing they left us with is that bring us a good investor, an investor who will help invest in the company, grow the company, take it towards its maximum potential, and, will be okay. I mean, that's the ultimate, the fundamental message that we got from them. In terms of the management, I must say that the vast majority of the management has been extremely supportive. I think they are waiting to be unshackled from government systems and processes. It's just a very, very few that have concerns, but we will work through those concerns, because at the end of the day, we are very confident that with private capital coming in, with the right investors coming into these businesses, that these companies will actually grow and they'll become way more efficient, way more profitable, and the employees and the management teams are going to benefit, not just from a rupees and cents perspective, because not just from a salary increase or an additional bonus or whatever, but there will also be technology and knowledge transfer, right? And this will benefit the employees and the management teams quite significantly. So I think it will be a positive exercise.
And you touched on some of the efforts in the past to privatize SOEs, and that you made some observations that the process may be flawed on some level. Perhaps if you are able to, could you go into a little bit more detail as to what was wrong the last time, and specifically what we have changed this time around to kind of give the audience a bit more confidence that this time we will do it correctly?
Yeah, so we will publish the divestiture guidelines, which have now been approved by Cabinet. So that outlines the complete process that we need to follow, right? And we'll keep the public informed from time to time in terms of progress. So we'll make this as transparent as possible. I mean, we'll make it a transparent exercise. And like I said earlier, we've identified the points at which previous privatizations were reversed, the reasons why, and the process that we are following now tries to mitigate those risks. So there were issues surrounding things like valuations, etc., which we will hopefully overcome this time.
There was one more question from the audience. So I think some of the SOEs which are kept in state hands are kind of government. Sorry, excuse me. Sorry. Yes. So there was a question from the audience talking about government. Sorry, excuse me, Suresh. There was one follow-up question regarding the SOE holding company, and kind of that Singaporean style holding company. And one thought on that was that many of the Singaporean SOEs were actually quite successful prior to the establishment of the holding company. So why do we think that in Sri Lanka this structure will be beneficial?
Yeah, so fundamentally, the management of SOEs in Sri Lanka has not necessarily been the kind of professional management that you would see in the private sector. So we are trying to bring that private sector orientation, the governance systems, the governance structures, the whole private sector commercial orientation into these enterprises. Because as a commercial enterprise, to be sustainable, you need to focus on returns. And for whatever reason, the SOEs, the way they have been managed in the past, the focus on return, the return on capital, the return on the capital invested, the return on equity, the return on assets, these have not been considerations. So the operating and political environment in Singapore is pretty different from Sri Lanka. So here what we are trying to do is to create a structure that ensures that these state-owned enterprises are managed professionally and managed competently, and in a way that they are no longer a burden on the government. So we've done it in a particular way in the past, right? It hasn't worked. So now we are trying something else. We are trying something new for Sri Lanka, but I think it's a proven model in other parts of the world. So Singapore, Malaysia, there are many examples in Europe and I think also other parts of the world. So we'll try and see.
Thanks for that, Suresh. So I think some of the press that was sent out by the SOER, you mentioned a governance structure for SOEs based on 9 principles. I don't think I was able to find those 9 principles in a certain article, but for the benefit of the audience, would you be willing to briefly state what those 9 principles are?
Yeah, I can't remember all 9 offhand, but no, I'll just I'll touch on some of them. So, yeah, so firstly, we speak of what type of enterprise should remain under government control and what enterprises should be divested, not by name, but we give a basis of selection. So that would be one. Second one is that all the SOEs, including the holding company, will need to follow to the extent applicable the listing rules of the Colombo Stock Exchange. So, for instance, each one of these companies would need to have board committees, the audit committee, the nominations committee, a risk committee, and so on and so forth. They would need to publish their accounts like any listed company. So, you know, a listed company with 1,000 shareholders has to publish its accounts quarterly and annually. But SOEs that have 22 million shareholders are not compelled to do that, right? So we are saying that doesn't work. All SOEs, including the holding company, would need to publish its accounts both quarterly and annually, and, you know, put the information out to the public. That would be one. Then we are saying that you can't park subsidies within these SOEs, that they've got to be taken into the government budget. We want single borrower limits implemented across the SOE sector. We are saying that SOEs over a period of time should no longer be dependent on state bank borrowings backed up by treasury guarantees. So they should be able to go to the banks on their balance sheets rather than on treasury guarantees. So these are some of the principles. I mean, I don't think I covered all 9. I can't remember all 9. Not in memory. I got to look at some document. But these are some of the things that are covered in that policy paper, and these are some of the principles.
Understood. Suresh, you mentioned a public-private partnerships earlier regarding the 20 that might be kept in state hands. Now, typically PPPs are kind of tough for the private sector to engage with the government. What do you think? Like in what instances would we resort to PPP, and how would we ensure that that is executed optimally?
So there is a separate PPP unit, and there is a separate PPP legislation that is being drafted, which should be submitted to Parliament, I think, before the end of this year. So that'll give you more details. But, you know, fundamentally, it's any entity that is retained in government. I think there is a case, you know, unless there are very, very exceptional circumstances, to use a PPP model to, if nothing else, to simply bring in private sector management into these entities so that they are, you know, managed better to start with. You know, I've come to realize that you know, just as much as the private sector can't engage in politics, we don't know how to do politics, right? Politicians don't know how to run commercial enterprises. And that's the reality. So we need to get people who know to run commercial enterprises to run them. People with the right level of experience, capacity, skill. Otherwise, there's a huge mismatch. So even if government were to retain control of certain enterprises, I think we need to bring private sector management in.
Right. We are almost out of time, Suresh. Let me close off with one final question, perhaps on a more positive note. I think lots of the commentary regarding the SOE divestments has been met with criticism, talks about potential delays, but perhaps for the benefit of the audience and the general public, perhaps you can talk about some of the good work that's been done so far, which you would like to communicate to the audience.
So let me put it very simply. I think since 2005, which is something like 18 years ago, this is the first time that we managed to even appoint transaction advisors. And it's not for one enterprise, we managed to do it for 7. So whilst, yes, we've not gone at the kind of pace that we would have liked to, I think we've got quite a distance, so that's simply on the divestiture side. We've got a SOE policy approved by cabinet. We are working on a draft SOE law as we speak. So there are some significant changes that are indeed taking place, and this is all over a period of now. We are in the 9th month. We started around November last year. So yeah, in less than a year.
Okay, great. Suresh, I'm conscious that you have to rush at 9. So I want to thank you so much for your time. Thank you to the audience for sending in your questions. And that will conclude this session. Thank you, everyone.
Thank you, Praveen. And thank you to Cal also for having me this morning. Thanks.
Thanks.